It is finally value investing week. Oh, I'm so excited, and I'm sure all you value investors out there are excited too. But some of you are probably thinking, wait, AK, how can you talk about value when you're a systems trader? Shouldn't you continue to talk about systems like you do in every single video ever? Well, to that I say that sometimes a man has got to talk about more than just systems. And honestly, Value Week was not my first choice. I wanted it to be Minecraft Week. But I did not have a horse named Jorgen, nor did I have a dog named Sven. So here we are, Value Investing Week instead. And look at this, to commemorate Value Investing Week, we even have a Value Ventures checklist, a 3-step checklist for finding hidden value stocks in the market. You could almost call it a systematic way to do value. So of course, you know we still got that systems flavoring on everything. But as always, free download, you could get it. Just go here. I'll put a link to this page up above and down below in the description and comments. You can click this button, there's this pop-up, you put your name, email, and we'll send it right over to you. And this checklist and all of our value content over at MacroOps, which you know is the research company I co-founded, it is all created by our value expert, Mr. Bean. Yes, this guy, we decided to hire him. He's had a rough few years in the entertainment industry, and we said, you know what? Wipe that white powder off your nose and come work with us. No, we didn't actually hire the Mr. Bean, but our value expert has to go by the name Mr. Bean because his fund has compliance rules, so he can't reveal his real name, at least not yet. That's coming. We'll do a huge name reveal and face reveal. It'll be great. There'll be streamers and stuff, maybe cake. Why did he choose Mr. Bean as his alias? I don't know. But the checklist that he made is great nevertheless. Go check it out. So let's talk about value investing. And when I say value investing, I also mean just fundamental investing too, because that's what you're getting into, right? A company's fundamentals. So when you think about fundamental investing, naturally you would think that more information would help you out. So more data about a particular company that you can analyze. And there's already a ton of data that you could look at just in the quarterly reports that these companies release, right? Margins, backlogs, debt, so many things you can dive into. And then on top of that, you could do boots on the ground research. So you could call the companies, ask them questions. You could show up at that company's executives' houses and dig through their trash and find special information. So there's just a lot of things you can do to make that true hardcore research happen. And the more information you have, the better, right? No. Not right. It's not about more and more information. That doesn't actually help your analysis. That doesn't help you form a thesis. What you need is the right information. Whenever you think of an investment thesis, whether it's in stocks or currencies, commodities, anything, what you're always trying to do is narrow down the one main thing that is moving the price, because that's what usually happens. Most of the time, it's not a bunch of little factors. It's one main thing that investors are focusing on that is driving the price. So when you're value investing and doing your fundamental analysis, that's what you're looking for. So the idea is that if you picked up the phone and called your boss, who imagine is a hedge fund manager, you should be able to pitch him this idea in 3 sentences. That's how clear the factor that's moving the price should be. And the other issue is if you have too much information, you start to develop a false sense of confidence. You start to lose your fallibility because you got all these numbers that you've been digging through. You've been doing your boots on the ground research. You know what that CEO ate for breakfast. You even became a substitute teacher at his son's school, so you could watch that kid and see if he's giving any indication of what his father is feeling and what he could possibly do in the boardroom. You are doing everything you can to get that extra edge. You get so much information up in your brain, pretty soon you lose all your hair and you start thinking you're this guy, just the master of all secrets and information. That's how confident you are. But you know what happened to Varys, right? It did not work out for him. He got to feel that dragon breath. And the same thing would happen to you if you get too confident, because then you're not able to see the other side. You're not able to see when you're actually wrong because you've done so much research and thoroughly convinced yourself that you're right no matter what. It's false confidence. It's a trap that many investors fall for, especially because of the internet nowadays, where not only do you do all this research, but you post about it all day, just convincing yourself. You find your little echo chamber. It's terrible. So as an example, when I was doing my discretionary growth strategy back in the day, before I became an amazing systems trader, the main fundamental factors I would always look at were revenue and earnings, top line and bottom line. I wanted to see earnings growing very fast, at least 25% quarter over quarter and year over year. So I knew if earnings were growing, then it was probably going to be a good growth stock, right? Because this wasn't the only factor I was using, but it was the main fundamental factor. But there was one more key thing that I wanted to check. I wanted to make sure that revenue was also growing at a high rate, because I wanted those earnings to come from increasing sales, not from cost cuts or other financial engineering. So again, on the top line of the revenue growth and the sales, I wanted that growing at 25% 25% and above. So I knew if those two things were working together like they're supposed to be, then I didn't necessarily have to look at margins or all these other things. Now, I can't say I was the best at the fundamental analysis, but it worked okay. And I think for my strategy, I was basically narrowing down what was important, or the most important. Now, Mr. Bean wrote an article recently where he broke down the Arlington Value Investor letters. And Arlington Value is just a hedge fund made up of one guy who works in an office above a taco shop, but he absolutely kills it. He's returned over an 18% compounded annual growth rate over 11 and a half years. And his main fund has returned almost 38% since 2008. So the guy's name is Alan Meekum, really smart. And in this article, Mr. Bean breaks down 5 invaluable lessons from his letters. So the first lesson was less, not more information is better. You gotta avoid noise. So Mr. Meekum, in his 2008 letter, he says, I disagree with the notion that more information is always better. So Beanie explains more here. He says Meekum is old school. He reads print newspapers and avoids the sensationalist financial news media found on TV and the internet. And he's not alone. A lot of smart investors do this too, on purpose. Like Warren Buffett, our boy Walter, and countless other value investors. Buffett doesn't even have a computer in his office because they are all trying to avoid that fire hose of information that's not useful. So the edge in the less is more idea is that without all that information, you'll have clear thinking and an uncluttered mind. Our brains only have so much decision-making power capacity each day. Disposing that energy into numerous outlets, reading too many blogs, following too many investors, watching Mad Money, oh God, Mad Money, really. That reduces our brain's capacity to make full-powered decisions on important questions. I completely agree with this. In the last year, actually it's almost 2 years now, I have cut down my reading so much. And I always feel guilty, because everyone talks about, oh, it's so important to read nonstop. But I'm like, no, things have been going much better for me. Because sure, I could do what all these guys brag about, like read a book about biology and somehow that's going to influence my investing methodology. Sure. Maybe. But I've also found a lot of success in just cutting out all this extra information and just really focusing on executing what I'm doing. And the feedback from that execution basically teaches me what I need to know. And I make sure to execute enough that I'm too tired for all this extra reading. So it's nice when I read that value investors do the same type of thing for a slightly different reason, but kind of the same reason. So Meekum talks about this too. He says a steady surge of information coupled with short-term performance pressures can push rational long-term investing to the brink of extinction. The easy access to information and the snack bar nature of consuming it suggests that disciplining one's temperament rivals the need for energy and action. So basically, the less information you consume, the more time you have to ponder the few critical bits that really matter. And once again, I completely agree with that because you only have so much brain power in the day. Rather use that on execution than just learning things that might help or gathering information that is mostly irrelevant. So this applies to more than just value investing. So when in doubt, just cut it out. Cut down your information sources. It'll help a lot. And this value checklist will also help you a lot. And it's free, so there's no harm in downloading it and checking it out. I'll put a link to this page up above and down below in the description and comments. Just put your name and email in and we'll send it to you. Mr. Bean's Value Checklist. Great for finding value stocks. And if you like this video, make sure you subscribe to this channel and hit that notification bell so you get email notifications whenever we release new videos. We're releasing at least 6 times a week, so make sure you subscribe so you don't miss one of those. I will see you in the next one. Stay fallible out there. Bye.